Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, happy to be back.
John, where does Novo and its Pilbara conglomerate gold play stand today?
The market seems to have completely lost interest in the Pilbara conglomerate gold story, which you can see in the weak stock price and the surrogate pick, Pacton Gold, which picked up a lot of land in 2018. Pacton Gold itself is talking more about its Red Lake projects than it is its Pilbara projects. The problem that has happened is that the Karatha, the work Novo did on the Karatha project, which is a 10-kilometer segment of outcropping conglomerate beds that host these quite large sort of melon seed-shaped and sized nuggets. Cometwell and Purdy's Reward were the names of these two blocks, is that in 2017 they did 300 kilogram samples and realized that wasn't big enough to quantify grade. And in last year they did 5-ton samples, and that also wasn't good enough. And they came to the conclusion that this gold is so coarse that we need to do 100,000-ton samples in order to properly quantify what the grade of this material is. And since then, Quinton Henney has also changed some of his thinking. He still believes that the gold came from being precipitated in a marine setting by algae, but he thinks it was in the deeper environment of turbidites, and that this gold eventually became part of the basement rock and formed traditional veins from which this gold has eroded, which means that the gold is going to have not like what we had hoped in the beginning, this sort of shallow lagoons where it would precipitate in these algae mats and kind of just stay where it was and then get blanketed by that regionally extensive Mount Rowe basalt flood. Instead, what we have is a more traditional alluvial setting where this stuff comes down from the hills and ends up being deposited in these beds. And that would mean that even though it all happened at the same time, and these beds are, maybe 5-10 meters thick at most, and they sit between the older basement and the younger Mount Rowe. But it means it's going to be patchy. There'll be some areas where there is more gold, and some areas where there's less gold. And they've concluded pretty quickly in 2017 that drilling and assaying core was absolutely useless for figuring out where this is. And the problem in Australia is that 100,000-ton bulk sample, well, that's a small-scale mine. And that isn't approved unless there's a JORC resource estimate to support it. So Novo is pioneering a rule change. They've put together a big mineralization report which explains what needs to be done. The ultimate model they would develop is one where it's a statistical model. So they will take these 100,000 tons from these conglomerate beds and carefully process this and measure the gold content. But at the same time, they would be doing this in order to develop a statistical model so that as they work their way along the strike of these beds, they can do much smaller scale bulk samples and use what it is that they come up within that to extrapolate. Okay, this is an area that we want to excavate and process through what's largely going to be a mechanical sorting system, because this gold is free. It's not tied up in any pyrite or anything like that. So they will at some point submit a formal application this year. I doubt that anything quick will happen in terms of approval. So that entire story that had us all so excited in 2017, it is temporarily on hold. But it's still a very important story because, they're focused on their 10-kilometer segment, but they acknowledge that this type of conglomerate, which hosts these large nuggets, which are different from the ones in the Beatons Creek area where they have about a million ounces outlined at between 2 and 3 gram per ton. That is a finer type of nugget over there, and they were able to, with a just under 10,000 ton sample. They were able to confirm what they were getting with smaller scale samples and put together a resource. But this is a huge area in the Pilbara that could one day still become one of the biggest mining camps in the world, but it has to solve this measurement problem. And so Novo's focused on advancing the Beaton's Creek project as, a traditional mine, but its main focus is the Egina region, which is sort of halfway between Beaton's Creek and the Karatha region. That's about 400-kilometer difference. And this is an area, they acquired this last year and paid a pretty penny for it, but this is an area where there are marine terraces that formed when the ocean would rise and fall, who knows how long ago, and let's keep in mind that this conglomerate bed is sandwiched between the Mount Roe basalt, which effectively preserved it, and older basement rocks. And as the edge gets eroded, the rocks, which right now at Comet Well are literally rock hard and require blasting and that, here they've already been turned into gravel, and with the wave action from the ocean washing it back and forth, it has sorted the heavier minerals into horizons. This is very similar to what happened on the Namibia coast, the Skeleton Coast, or Spergebiet, where the Orange River dumped all these diamonds from the Kimberley fields into the Atlantic, and then because diamonds are actually quite dense, they ended up being sorted within these marine terraces that De Beers, in conjunction with the Namibian government, has been mining for quite a long time. So what they're doing in the Egina region this year, and they have all the permits in that, which was one of the reasons they paid a lot of money to the existing operators, is they're going in there with ground penetrating radar to figure out where are these lag deposits that are potentially gold bearing, and they're even using metal detectors to help confirm that this is where we should be. And then they're going to be taking 100-ton samples to process that and see what sort of gold they're going to get, and see if they can do larger scale mining in this area. And there's not going to be a problem with that. And the interesting thing is, one of the challenges they mention in their mineralization report is that the mechanical sorters that would ultimately be needed for large-scale mining at that Comet Well and Purdy's Reward, there's some technical issues that need to be sorted out. And so they're going to be using the Egina processing activities of these smaller 100-ton samples as a bit of a workshop to start to figure out which of these mechanical sorters work best. Now, this would seem to be, okay, we're going to be plodding along and may get some gold out of this area. It'll still be kind of tough to quantify in advance how much gold there is. It'll be one of these placer mining operations where you never know what this year is going to produce. But in early June, they announced a very interesting deal with Sumitomo. And Sumitomo has been dancing on the edges of the Beaton's Creek project without ever doing anything, but they've agreed to earn a 40% interest in the Egina project by putting up $30 million US. And it's an interesting deal. Normally when you do a farm-in deal, you spend the money, you vest for the interest, you don't spend all of the money, you end up with nothing. In this case, Sumitomo, if it decides, we don't really want to continue funding these $30 million, and they decide to pull out, they will be able to convert what they did contribute into shares at a minimum price of $2 per share, or whatever the weighted average is of the stock at the time that it is at the time they pull the plug on this. And Novo's treasury right now is about $50 million. In early May, they managed to get $22 million dollars or $20 million from exercise of the 90-cent warrants that came with the May 2017 financing just before the Pilbara story broke. So they don't really want to deplete their treasury on the Egina, and having Sumitomo there with a ringside seat means that they'll be watching this. Basically, it's an R&D program with a careful eye as to what it means for what's going on in the much bigger story, which is the conglomerate-hosted gold in the Pilbara, the Karatha area, and that kind of knowledge that they would gain could potentially make them a very willing partner down the road when it comes time to develop the Pilbara conglomerate-hosted gold. So this year is kind of a treading water type year. We're not likely to see spectacular news. We may see some numbers of gold actually recovered from the bulk sampling at Egina, and we may see, activity at Beaton's Creek, which if gold continues in its uptrend, that will certainly attract bigger eyeballs. But I think the way Novo is set up right now is probably the best situation that it has been in since this play started in 2017.
We'll have more with John Kaiser right after the break.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're chatting with John Kaiser. John, gold producers are up 20-30% in response to gold's recent rally above $1,400, but resource juniors have not really responded. What are investors waiting for?
Well, the kinds of investors that buy the gold producers, they can see that the higher gold price immediately flows to the bottom line of mines that are already in productions. Profits will go up, and they'll go up a bit, and we don't need gold to keep going to $2,000 and onwards for the Barricks of the world to hold the audience's attention. And when you go downstream, the smaller investor remains deeply skeptical that this gold rally is for real, that it is sustainable, that it will do something like go into the $2,000 to $3,000 range. It figures that it will probably fail and gold go back to $1,300. And at $1,300, gold is not very interesting. It is $400 gold in 1980, inflation adjusted at present. That's $1,251. So $1,300 gold is just 12% higher than in real price terms, and this is after the mining industry nearly doubled the gold spout stock in the last 40 years since gold broke out in the 70s. There's two sort of spins on why gold is doing this. One is that there's pressure on the Fed to put interest rates down in order to make sure that Donald Trump gets reelected in 2020, keep the stock market from collapsing, keep the economy from going into recession. In the old days, in 2008, all that sort of created the inflation narrative. This will cause inflation. It should make gold go up. And gold did rally to just short of $1,900 in late 2011, but then the inflation never materialized, and then it ended up going back to sort of stabilizing in that $1,100 to $1,300 range, where it sort of washed back and forth. So the audience that has followed this says, okay, this story is not very interesting. But many people seem to have forgotten what the late 70s was all about. Yes, at the time there was much higher inflation than today, and eventually the inflation was snuffed out by Paul Volcker when he jammed interest rates up to nearly 20% and created a recession that cooled off everything. But what was going on back then was that in the wake of the Vietnam War and OPEC putting the boots to America, and then the Iranian Revolution in 1979 in February, the Shah finally fled, and the Ayatollah Khomeini and his group came in and introduced a theocracy. On November 4th, 1979, they invaded the American embassy in Tehran and took the hostages, and that took forever to resolve. And in December 24th of 1979, the Soviets had the bright idea to invade Afghanistan, which ultimately helped them lose the Cold War. But at the time, this was another sign of America's weakness on the global scale. So one of the reasons gold ran to $850 in 1980 was this uncertainty about America's ongoing role in the global geopolitical order. And one could argue that something similar is taking place right now because of the foreign policies adopted by the United States, basically America against everybody else. The positive outcome from an American perspective is that everybody ends up kowtowing and capitulating and saying, yes, we will do whatever it is that you want. But an alternative scenario is that something breaks and that the rest of the world starts to really back off and the United States ends up alienated, and then there is a run on the dollar. And the trigger for this, the flashpoint for this, it's like the 40th anniversary of the Iranian Revolution. We have this conflict. We nearly had an attack on Iran last week. It's been put on hold temporarily. But there is a showdown where literally the United States wants to affect a regime change in Iran. And the people probably would like that, but it's not going to happen easily overnight, and certainly probably not by bombing the country and killing civilians. And the Ayatollah Khomeini this time around, they're all backed into a corner. They have no way out. The sanctions are putting pressure on the country. The general population is becoming more and more unhappy with all of this. I mean, what does the ordinary person care about what's going on in other parts of the Middle East? They would rather just enjoy a life of prosperity. But this is kind of it's a big power trip, and it may not all unfold as easily as the Iraq War in 2003 appeared to initially unfold. So we could be at a stage where gold, through this uncertainty stress, undergoes a very sustained rally, and the equivalent price to $850, if you look at the do it inflation adjusted, that's $2,658. And gold didn't go back to $100 or so, where $200 where it was in the late 70s before the Iranian Revolution kicked in. It ended up stabilizing at $400. And if you took $36 gold in 1972 and inflation adjusted it to 1980, it should have only been $77. So where it stabilized was a 400% real increase. And what the juniors need is a real increase in the price of gold. We don't need inflation to drive gold higher, because inflation, of course, means that all costs go up and your marginal deposit stays the same in any case. So I think we have the potential for gold to end up in the $2,000 to $3,000 range, wash around in there, and eventually stabilize in there. And that would be a significant real price gain, which would have an impact on the optionality plays as well as discovery exploration, because it would lower the bar for what counts as a discovery hole. And the fact that neither the discovery juniors nor most of the optionality plays are responding reflects this deep skepticism that no, it's not going to happen, it'll fail, it'll go back and bumble around between 1,200 and 1,400, which, as we've seen, is not very helpful for the resource junior space. But one exception that I would like to point out is Golden Predator Mining Corp, which has two projects in the Yukon. One is the Brewery Creek project, for which a PEA was completed in 2014, and the others is more sort of a discovery delineation project called 3 Aces. It's a high-grade gold system. Now, Brewery Creek was operated as a heap leach mine. It was a pioneering heap leach mine from 1996 to 2002 by Loki Gold, a group associated with Ron Nadolitsky, and it produced about 280,000 ounces, and eventually the weak gold prices killed that project, and it ended up in bankruptcy, and somebody else, Alexco, ended up with it, and eventually sold it to somebody else, and through a very convoluted series of events, it ended up in this company, Golden Predator, which has nothing to do with the original Golden Predator that Bill Sheriff was involved with, that got spun out from Energy Metals in 2007. But Bill Sheriff is involved with this project. And they took it on in late 2009, and they were sort of promoting it as a gold optionality play. At the time, gold was still running. It didn't peak until 2011. But in 2013, gold did collapse. And in 2013, they got the bad news that from the Yukon government that Golden Predator's plan to put this project back into production at 7,500 tons per day, produce maybe 372,000 ounces under the old mining permit. Nope, we're not counting this as a brownfields project. This is a greenfields project. It will result in you need to do the entire permitting cycle from scratch, which takes a lot of time, a lot of expense, and it also had another consequence for the original Golden Predator that had it at the time, in that Red Kite, which had put up $35 million, treated this as a break of the covenant and called on its loan, and the result was that the money had to be they ended up with the portfolio of royalties that America's Bullion had at that time, and the Brewery Creek project eventually ended up in a combination of Redtail Metals and Northern Tiger, which itself had been spun out from Firestone Ventures a few years earlier, so that the high-grade Three Aces project could get serious attention. But once the Yukon made that decision, and of course gold slumped down, the PEA, which had to use a $1,300 base case price, it had only a $32 million NPV, and that's at 5%, and yet CapEx was $85 million US, and you don't put into production something where the NPV is a third of what the CapEx was. So it's been kind of an optionality play. Any work that Golden Predator has done has been on doing metallurgical studies. Its primary focus since 2016 has been to try and figure out the Three Aces project, which is an orogenic gold system, and that can mean good, such as in the Abitibi Greenstone Belt, but it can also mean bad in that the veins are narrow, they pinch and swell, they can be erratic. They've focused over 300 holes into a small 3-kilometer segment of what they think is a 30-kilometer trend, and yet they still don't have a resource estimate. But what they did do start a couple of years ago was, okay, let's start bulk sampling this material. It outcrops at surface. It has some very high grades. Let's start creating cash flow by doing this. And so they got this going. Janet Lee Sheriff does a lot of work with social license issues in that. They've got the two First Nations that are relevant, one to the Brewery Creek and one for Three Aces. They've got them on side. And so by not just exploring Three Aces, but by doing these bulk samples, maximum 10,000 tons a year, 50 tons per day, they hope to keep everybody in the area happy with jobs and hopefully generate more cash flow than it costs to operate the bulk sampling program. But the company, it had managed to raise $36 million since 2016, managed to trade over $2, and their last financing was $8 million in 2018. But much of that money went into exploring along strike from the central core. They had picked up the surrounding claims called the Sprague, and that didn't lead to any more conclusive results. They do have a hypothesis that if you go deep enough, these veins coalesce and converge so that you have a bigger underground mining target, but that hasn't really been demonstrated yet and would require a lot of money. So you have this company who's bumbling down at 15 cents or so, no money left, Bill Sheriff in the super dog house, and yet the stock's now up to 25 cents. And the only difference between, say, Golden Predator and many of these other juniors that have, marginal ounces in the ground that need $1,600 or better, he's a promoter. He's been picking up the phone and calling people and saying, hey, we have this Brewery Creek thing, if gold keeps going, this is going to be back in action. We also have this high-grade 3 Aces thing, which, if we get into a big gold market, we'll be able to raise a lot more money to properly explore this. And it could be something like Osisko Mining with its Windfall project, which has managed to raise $200 million to, do very detailed exploration of what is also a system of narrow gold veins. So we have an example in Golden Predator Mining Corp of investors starting to respond to the better gold price, but for it to spread elsewhere, we will have to see gold deliver, get beyond $1,500 and have a logic underpinning the trend that makes people say, okay, this isn't just a temporary gotcha rally in the gold that's only going to hurt us if we pile back into the resource juniors.
We'll have more with John Kaiser right after the break.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Welcome back. We're speaking with John Kaiser. John, are there any new exploration plays we should be watching for a discovery?
The junior I'd like to introduce today is Rugby Mining. It's been one of my perennial bottom fish companies. It has been pretty much of a disappointment. It was a CPC created in 2007 or 8, but it didn't really get a life until 2010. It is controlled by that team of Yale Simpson, Bryce Roxburgh, and Paul Joyce, the people behind Exeter and its spin-out Extory Gold. And those were two huge exploration successes that came out of the prior decade. Exeter ended up with the Caspiche project, and Extory ended up with the Almoro high-grade gold-silver discovery, and both of them ended up being bought out in 2017 for Exeter, 2012 for Extory, at a total amount of $600 million. That, doesn't sound like much today, but when you think back in 2010, Exeter managed to hit $9.32, and Extory in 2011 hit $14.84 before getting caught in the gold pullback after late 2011. These were fundamental success stories delivered by this group. And rugby was supposed to be, okay, with these things gone, rugby becomes our new vehicle. And they latched on to two projects in late 2010. One was the Mother Lode project in the Philippines, and the other was the Comito Cobrasco projects in Colombia. And Colombia at the time was doing well because of the Ventana success that led to a $1 billion buyout by Ike Batista, one of Richard Wark's big success stories. The problem with the Cobrasco project was that they got it from Rio Tinto because Rio Tinto wasn't able to get any permits. And it's within the so-called Choco copper porphyry belt in western Colombia where not a lot has been done. And the difficulty they had was to get a permit to explore this project. And they did everything they could. They did the indigenous people deals, the social license stuff. But in April of this year, they finally got the word from the forestry department in Colombia is, no, we think this is a delicate ecosystem. We will never grant a permit for anything. So they spent sort of 8-9 years waiting to get a permit to drill this prospect and ended up having to give up. In the case of the Mother Lode project, this was a former high-grade vein mine with silver maybe five times the grade of gold as compared to the much higher ratios for traditional low sulfidation epithermal systems. This thing operated between 1937 and 1953 before it burnt down. Apparently produced about 500,000 ounces at a half ounce per ton average grade. Was pushed down to about 350 meters depth before the mill burned down and further operation ceased. It's on the Mindanao Island, which is known for not huge, maximum 200 million ton copper gold porphyry deposits, but they are enriched, and it's a good thing they are enriched because you can't develop any open pit mines in this area, but there are a couple that are being developed for underground mining. And what Yale Simpson and his team believe is that this vein is actually a high sulfidation epithermal extension of a deeper porphyry system. And they had picked up, optioned 80% of this project in 2010 and acquired the surrounding ground. But the problem was the underlying lease had expired and needed to be renewed, and things moved very, very slowly in the Philippines. They were able to drill 8 holes, 4,000 meters on the peripheries of this, which helped confirm their hypothesis that there's a big porphyry system underneath this. And of course, they already sort of knew that because an Australian junior in 2005 had drilled some holes. It had not used geophysics. It had just gone in there and drilled these holes. But when Rugby went in there, it managed to get an IP survey done, and lo and behold, yes, there is a chargeability high beneath this sort of 700-meter long vein system that, to a depth of 350 meters is pretty much mined out. And the distinction between low and high sulfidation is important because the low sulfidation systems tend to have a constrained vertical range, the boiling zone where the gold and silver drops out, whereas the high sulfidation systems, they have much greater vertical extent. So there is potential for finding more high-grade gold veins down deeper. But because they couldn't get the permit for it, they had to sit there and wait and wait. And one of the tantalizing things that came out in the IP survey was a second lobe, chargeability high, to the south, which seemed to suggest that there's a blind fault offset of the original vein. So in January, they finally got everything in place to resume a drill program. They are now setting up to drill only 2 holes, one which twins a hole that the Australian group drilled that goes underneath the vein system and then into the porphyry, and they'll push it deeper because they have no core left. They want to see, what is this thing all about? They want to know, do we have a blind porphyry system at depth that could end up becoming an underground mine? Is there more gold that isn't mined out related to the vein? And the second hole will likely step over and test that chargeability high to the south. And there, if they demonstrate, well, this is the vein offset, well, then they have potential for another maybe 500,000 ounces of high grade, and obviously it would be emanating from the deeper porphyry system. So the way to look at this story is this group, which has raised $20 million in the last 8 years, spent most of it on other projects that weren't as interesting and did not have any real results to really write home about. Here it is, the insiders have kept all their paper from the original days. In fact, they've increased their stake. They're rolling up their sleeves. They finally get to tackle the project by which they wanted to launch the Rugby way back in 2010-11. And you know that that first hole is probably going to have something very interesting. They're doing it at a time that gold is showing signs of coming back to life. And this is a group which, has other things in its back pocket. Inside Rugby already is a portfolio of Colombian projects bought from Barrick in 2016. Barrick had spent $20 million in Colombia and then finally gave up because it couldn't get its best projects permitted, and the one that did get permitted ended up not being high grade enough. So they bought this portfolio, and it's not actual projects, it is application pending, and Colombia has been extremely slow in granting permits for which licenses have been applied for. So this Sorotama portfolio that they have, this is something in their back pocket that could come to life in the next while. But this group, Bryce is based in the Philippines and Australia. It's an international group. They obviously love South America. Caspiche was in Chile and El Moro was in Argentina. I suspect that Rugby's the kind of junior which will use whatever it is that comes out of the mother lode drilling to launch itself, get itself properly financed, and pull in the other projects. Because one of the big things is we have been operating in a glass worse than half empty market. This market says everything is empty. Everything's a failure until proving otherwise. We've forgotten what it is like to be in a market where the glass is half full. So you look at groups such as, Bill Sheriff and his Golden Predator people who have, a history of being able to promote when the timing is right. And of course, Yale Simpson's team, they've got 2 success stories in the recent decade to point to. These are groups which, when this market glass switches to half full, these are the ones that are going to be the first to get traction.
John, thanks a lot for the update.
You're welcome, Jim.
We've been speaking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.